This is a pattern, a reversal pattern I want to talk about. I've done a lot of videos on this, but this is real time right now, so I thought it might be apropos. This candle is called a lot of things: gravestone, shooting star, evening star with this next red candle. Call it whatever you want. The point is that when you have this big run up with the stock, and I wrote this just before it went, I said if this next 2-minute candle, goes red, then you want to get out of the trade. So you get this big spike up, it closes at the bottom of the range, right on the support there in this case, and then the next candle goes red. You need to get out of that trade because 70-80% of the time, at least, maybe 90% of the time, it fails and goes off. Now, the thing is you don't know how far it's going to go down. It will, it's going to pull back. In this case, it's pulled back $1.50 from the top on 1070 to 940. So $1.30 move to the downside if you had to, put in a market order to catch this run. You might have, chase if you had FOMO chasing it. So we don't know how far it'll go down, but we just know that it's 90% of the time, 80% of the time, it's going to correct and continue to sell off. The problem is now that you have this is your candle, this is your volume to 300,000, 265,000. And then the next candle, 100,000, 150,000. So all of a sudden, you've got a lot of overhead in the stock now from the people that were buying this coming in, thought it was going to run, don't sell. Those that chased it. Now, any kind of bounce, it's going to have some trouble because you've got this big overhead for it now. But this is just a really good pattern to recognize. As soon as you see that next candle's red, you just need to get out of the trade.